Now, so the answer is for things that we've talked about today and deeper things that I see in our future. Mm-hmm. I believe the next 3 to 5 years in this business of buying notes is going to be the best I've ever seen. And I've been doing this since 1980. Literally. Wow. That's how good I think it is. There's efficiencies in the market that are in progress. There's technology in the industry that is in progress to the point where I'm involved with a firm that within a year we're going to be selling loans on blockchain. Like I'm saying, the efficiencies in this business and liquidity in this business is changing at lightning speed.
Welcome, my fellow Flowmasters, to another episode of the Cash Flow Authority podcast. I'm your host, Chris Jansen, founder of the Flow Authority, and this show is for high-performing professionals who did everything right. You have the degree, the career, the income, but you still feel like there's another level waiting. And so here we explore how real estate can become the next challenge worth building so that you can take ownership of your future and really create a life by design. Now, today we're joined by a special guest, Mr. Eddie Speed, and I love that name. Love that name, Eddie. But Eddie, just a little brief overview of Eddie. Eddie is the owner and president of NoteSchool and Colonial Funding Group. He has decades of experience in note investing and real estate finance, so we can talk about more of that today, the note world. He founded NoteSchool to educate investors on purchasing performing and non-performing mortgage notes and has trained thousands of students. He's also involved in acquiring and managing portfolios of real estate secured notes. So welcome, Eddie. Happy to have you. And we'll probably have to get into some background on what is a mortgage note and all that stuff. But yeah, glad to have you here today.
Thank you. I'm glad to be here.
All right. Amazing. Well, I always like to ask the question about your journey. How did you end up in mortgage notes? Did you start out in real estate investing and kind of work your way into it, or how did you figure that out?
No, it was a total accident, Chris. I was 20 years old and I was introduced to this business in 1980 by a man that later became my father-in-law. And it was just a complete accident. He was an old real estate investor, had done, bought foreclosures and built houses and rehabbed and rents and all the stuff, right? Fireman, had the secondary job of real estate, all that story. And then in 1980, interest rates got really high because of inflation. Mm-hmm. And so notes got really hot. And a lot of people did notes to seller finance property. And he just introduced me to this business. And I was just, like I said, I was 20 years old and didn't have a lot of life experience, business experience. And so I started out in the note business, not in real estate investing, which is fairly abnormal, by the way.
Yeah. Okay. Interesting. So, and when you say notes, just can you give some background? What is
Sure.
a note versus a mortgage? And, are you buying the real estate and then, writing a note? Like, how does that kind of structure work?
All right. So most people in this audience, because you described your avatar, right? Most people in this audience have bought a house. Mm-hmm. Most people in this audience have bought more than one house. So the realtor gets you all signed up, and then you go to the title company and you sign a bunch of documents. Mm-hmm. And one of those documents that you sign is where the mortgage company lent you money to buy that house. And it's called the note. It's the promise to pay. It says what the principal amount is due, what the interest is, what the monthly payment is. It promises that they're going to get paid, and you and your spouse sign the bottom of that note and you guarantee payment. Now, this is a real estate secured note. Mm-hmm. So you also signed another document, which is either called a mortgage or a deed of trust or something kind of like that, depending on what state you're in. And so that's a real estate secured long-term note with interest. And now they have a first mortgage on your house. That's what I buy.
Gotcha.
I buy real estate. I buy paper. I buy real estate secured notes that are payable over time with interest.
Okay. Now, you mentioned the 80s. I want to kind of hit on this too. You mentioned the 80s, the interest rates being really high. So would you say interest rates are high? I mean, it's all relative, but would you say interest rates are high right now? No. Right.
No, the average interest rate over the past 50 years is 7.7%.
There you go. All right. Thank you for busting the myth. So if people are trying to get into investing, I mean, whether it's on the note side or real estate, they're buying real estate. This is what I've been preaching. It's like, hey man, that can't be an excuse. If the deal depends on 7.5 versus 6.5%, it's probably not a deal, to begin with. But thank you for setting that straight for us. So, okay, so how are you, I guess if rates aren't that high right now, historically, is it still a good time to be investing in the note world as opposed to just buying the real estate outright?
Well, we have cycles in the industry where notes are better, and we have cycles in the industry where physically owning the property is better. Okay?
Makes sense.
Now, this is one cowboy's opinion, okay? So you may not agree with this, but we are definitely in a note cycle.
Okay.
Right? What happened to real estate, your folks on this podcast, they didn't do anything wrong. But the market changed. Somebody moved their cheese. And that was done by inflation. So in most parts of the country, California being an exception, New York City being an exception, Seattle, Portland being an exception. There's exceptions to this, okay? But for the most part, overall, in 2018, people that bought a rent house could net about an 8% return on their investment per year before they made their payment to the bank. Okay? Meaning that you had a $200,000 house, you could make about 16% income off the rent, net income after the rent, after all the expenses are paid. And that was a truth in 85 or 90% of the country. Today, 4%. Same house, different math, different economy. And that is because of inflation. And your house went up in value, but you have trapped equity. You're not getting paid for your equity. And your income, your net income is dropped by half of what you could have made on the same investment back a few years ago. Okay? So you can buy a note and make 9 to 11% interest per year. You can buy a rent house and make 4%. A lot of tenants and toilets on one side, being the bank on another. Okay? And believe me, I'm very connected in the real estate investor world of the top, call it 1,000 house buyers. Right? I'm in lots of masterminds. I'm on stages all the time into that audience. Not the baby landlord that owns 1 or 2, but the guy that owns 25 to 1,250. And today, we have a gigantic initiative helping them convert their rentals to seller financed houses for this very reason.
So would that mean that you're having them sell their house, basically sell their investment with a note? Okay, and do these people own their property free and clear, or is this more of a wraparound mortgage situation?
Neither. They own it. They don't own it free and clear. And part of what we do is we buy part of their cash flow of that note immediately and give them the liquidity to pay off the underlying debt. So we're not teaching people to wrap notes with a due on sell clause. That's probably going to burn somebody's fingers, pretty sure. And we're giving them instant liquidity, but we help them with that process. So the point being is this, right? Everything about life is about timing, right? And I've been doing this for 46 years, so I know a little bit about timing, right? Right now, I can show somebody an alternative to real estate investing, which has real estate security, which people like. Let me ask you a question. What's the tallest building in most every town?
Tallest building in most every town? I don't know, the bank.
Oh, you mean it's not a landlord?
Probably not. Probably not. Unless you're Donald Trump.
So right now, what's happened in the market? Right now, what's happened in the market is, inflation has brought in some economics that weren't the same. And so if somebody were buying a house in 2016, there would be no argument from me.
Yeah.
It was a great cash flowing investment that would go up in value and had tax benefits. All the above, like bam, check yes in the blank, yes. But that also means that not everything is great all the time.
Makes sense.
And so there are times that you have to switch. You have to look at possibilities of other than what people get kind of programmed into. This is the only way you can do it.
Right. Now, what about, new investors who, maybe they don't have, there's in my mind, there's kind of these two worlds in real estate. There's the active and passive worlds, or they're kind of two extreme sides, right? And you get everything in between. But there's a lot of people who really want to get into real estate. They've got the time, they're willing to work for it, but they don't really have the money. And so, they'd be more on the active side. Okay, you got to work for it. You got to do some flips, or you got to do some BRRRR methods to kind of build your way into it. And then there's the people who just got the pot of money and they can just go buy a note or buy, or just put their money in a private deal as an LP or something like that, right? So on the active side, the people who don't really have a lot of capital, are there ways for them to get into the note world, starting out maybe brokering notes, or is there some other way to do that?
Eddie Speed, 20 years old, living in a 10 by 40 mobile homes, about 40 years old. How much money do you think I had?
Not much.
So yeah, there are certainly ways that people can hustle their way into the business.
Okay.
And once again, if you listen to the name of this podcast, it doesn't sound like that's your avatar.
Yeah.
Right? It doesn't sound like you have a bunch of
not
people.
necessarily, but there's still people, there's still a lot of people I talk to that, look, my avatar is basically me, like 5 years ago, and I was unhappy, starting to lose interest in the W-2 world. And I'm like, yeah, there's got to be something cooler, something better out there for me. And then I found this beautiful thing of real estate. And so I had enough to get into, my first deal or so. But even with that, I had to get creative and had to hustle.
Tomorrow night, I'm going to be in Columbus, Ohio. I'm going to be speaking to 350 real estate investors. Okay? And most of them have been taught wholesaling, fix and flipping, and landlording.
Yeah.
That's my audience every day of the week.
Yeah.
Because that's what they've taught. That's what they know. But see, you said doing the BRRRR method. Wait a minute. What you're talking about is leveraging a rent house and getting a mortgage against it.
Yeah.
Okay. Well, do you know how to get liquidity when you buy a note and get your money back out of it?
You sell it, I guess. I don't know.
You see, mortgage banking would not work without liquidity strategies that relate to how do you get your money back out of a note when you invested your money in a note. I teach people how to do that.
Okay.
So everybody with a driver's license knows that you can get a mortgage against a rent house, but very few people know that you can go get your money back out of a note and still keep some income.
Okay. So there's some arbitrage techniques that you can use in the note world.
Mortgage banking wouldn't work without it, my friend.
Yeah, that's true. That's true. I'm in Toastmasters, and my speech tonight is all about that. I mean, it's, these are short 5 to 7 minute speeches, but a lot of the audience there, I suspect, are of the mind of buy everything in cash kind of thing. never use debt for anything. Debt is bad. And so my message for that, which I have a lot of work to do on that speech, but nonetheless, is basically what you just said. Like, one of the examples is, look, the bank industry wouldn't even be there. Like, that's solely what it rides on, is borrowing money at one rate and then arbitraging, lending it out at another rate.
Look, here's the strategy, right? In today's economy, net income on a rental property is low, and the cost of interest on a rental property loan is high. The bank's charging 7% and you're netting 4%. It's not really great math.
Yeah.
Okay. So I teach people to go into the market and have something that has a much bigger cash flow, usually about 2.5 times the net income of a rental. And I teach people how to do it. And there are very long-standing, established techniques that I can help people learn how to do so that you don't just run out of money. And so that's part of why I built a school. Like, the average guy walking down the street just doesn't know this.
Yeah.
They don't teach this in college.
It feels a little obscure. I mean, even just people getting into just normal real estate. I mean, that it's simple. You're buying a house, you're renting it, it's simple stuff. But even with that, there's so many other techniques you can use to really amplify your returns. So this is just another, in my opinion, another tool in your tool belt that you can leverage. Are most of your students younger students? Are they older people, like getting closer to retirement, who want more passive income, more likely?
So yeah, my students are typically, if they just want to buy notes, tend to be a little older. So call that 45 or 50 plus.
Yeah.
My students that want me to help them convert their rental houses to notes, they might be 35 years old. They have a rental portfolio, and it's most people that own a fairly significant amount of rent houses. It's pretty much a broken record. It's gotten a lot tougher to be a landlord, and the cash flow is less, and the aggravation seems to be more. And so there's a lot of people that have kind of been down that road, and now they're thinking, well, wait a minute. If the hot water heater goes out, I don't send the invoice to the bank, right? Yeah. But if I'm the bank, I don't pay people's expenses on their properties, right? I just collect interest and collect monthly payments. By the way, I'm the first to get paid every month. The landlord's kind of the last to figure out what he's going to make.
Yeah. I will say there still are, just for the viewers, okay, there still are opportunities to be had in the BRRRR method world and all that, because I am literally buying a 4-unit right now, and it's going to have a 25% cash on cash return. So there are definitely gems out there to be had, but what Eddie's talking about is more, if you don't want to spend all that time trying to find that diamond in the rough and then go fix it up and then deal with all the headache that comes with that to get the big return. This is a simple way, sounds like simpler way, to take your money that you've earned, at your high paying day job or whatever it is, your business, and go put that and go make a solid return, much higher than you're going to get if you put that into like a high yield savings account or a CD or anything of that nature. Does that sound about right, Eddie?
I totally agree. The world is not ever out of bargains. And sounds like you clearly are closing on one right now that's a bargain. And I'm around a lot of top real estate investor types that buy properties. So I fully agree and understand that's all true.
Yeah.
But a lot of people, that's a little beyond their grasp because they're not in, the deal business. I had a realtor friend say something to me the other day, and some guy was saying, well, just call me with a bargain. He said, if I find a bargain, I'll buy it myself. That's about true.
There's truth to that. Yeah. There's a lot of wholesalers, like you mentioned, right? There's a lot of wholesalers, and I'd say 90% of them, if not more, don't really know what they're doing. And the ones that do, they are usually doing both wholesaling and then burn method. So like you said, they find the really good one, they're going to keep it for themselves, right? And then they're going to get rid of the junk. And so, it's, that being said, it's a relationship business. Like this 4-unit came from a broker. It came from someone who I just stay in contact with. I follow up with all the time. And he just, hey man, I got this list of off-market properties. Take a look. If anything tickles your fancy, let me know. And so, hey, there's so many levers to pull, and there's just so many ways, but you got to be on top of all of them. You can't just use one way and just hope and pray that, you're going to just land on this deal. So, and I mean, look, this took me, I've been in a dry spell. It's been a year since I've done my 5-unit deal in the same area. And so it's just persistence. But, also the other thing, and you probably deal with this a lot, Eddie, is, it's a whole nother topic, but self-directed retirement accounts. If you've got, if you got an old employer 401k or an IRA or something like that, and you want to put that money to work in real estate, you can do what's called a self-directed account. And I'm sure you can buy notes with that. I wouldn't see why not.
I would say, Chris, that I would safely say that you have never interviewed anybody that's taught for more self-directed IRA companies than me.
Nice. Do you have a shameless plug to give for a particular company that you like working with? There's not too many out there, to my knowledge.
There's about 100 of them nationwide, and I've taught for about 25 of them.
Okay.
The 900-pound gorilla in the industry is Equity Trust. They have 400,000 clients, and I have taught for them a lot. I know Camel Plan, iPlan, all of these different ones. And I would say that, it's a little bit of this in that there's two things. A lot of these companies have different ways that they actually charge for what they do. And you need to understand that. And the second thing is you want somebody that makes the process easy. Because I sell literally of the notes that I buy, and I have a marketplace for my students that I go find notes for them and sell them. And I would say to you, we probably 35 or 40% of every note we sell goes into a self-directed retirement account.
Okay.
So when you said that, you saw that smile. I know that space pretty well.
Yeah, that's obvious to me. Like, hey man, because a lot of people are like, I don't have any money. Well, you got a retirement account? Yeah. You got money right there. Let's use it. Let's use it. I don't know. Look, I'm not going to pretend to know the stock market. I tried dibbling and dabbling in that for a little bit. I recently took all my money out of that because I don't know how much longer it's going to sustain these crazy prices. And this is maybe I'm just afraid. I don't know. Maybe I just don't know what I'm talking about, but that's just my feeling. And the thing with real estate and with these notes, right, is with the notes, especially, you got to fix, this is your interest rate. Like, this is your rate. With debt, this is your interest rate. So you know what you're getting. Whereas with the stock market, you might get a dividend. Even that, they can cut their dividends, right? They can cut their dividends. That happened a lot during COVID. So there's just so much uncertainty in that world. And I'm terrified of that. And I'm young. I can recover from it and all that, but I just don't want big losses in my wealth. Right?
Here's what I think the bottom line is, Chris.
Yeah.
I think that investing in notes, it gives people diversity in their portfolio of what they invest in.
It's true.
In my case, 46 years in this business, 50,000 closed transactions. I know that space pretty well, right? Most of my portfolio is tied up in notes, but I know it unusually well. I'm unbelievably comfortable with it, and I know the risk management profile, and I know how to lay that over the top of my portfolio of individual notes. Like, I know how to do that really very well. So in my case, I invest in what I know the best. because I happen to invest in something that becomes a passive investment. For a lot of your listeners, they just need diversity. Nothing wrong with having a rent house. It's probably not going to have much cash flow. Guarantee you. Like, if you're buying a rent house for cash flow, that's probably not, in most cases, that's probably not going to be very, very good, right? So some people are invested in the stock market. Nothing wrong with it. It's not my game, but I'm not saying it's a bad game. I get it. It looks like it just goes up, and when does it drop and all that stuff. But there's experts in the business, and I'd never tell somebody they're crazy to invest in something that they have competence and confidence in. Mm-hmm. But it is a great diversity to go into real estate or buying real estate notes as something else that you do too.
Yeah. Nice. Now, when you buy a note, like when you buy a CD or something like that, you're locked in for a period of time. So when you buy a note, how does that work? Is your money tied up for X amount of years, basically the length of the note, or what does that look like? Like, if somebody's approaching retirement, or maybe they just want to take their money out at some point. How would they go about doing that?
So once again, there are strategies to go give yourself liquidity. So there are liquidity strategies you could execute immediately when you buy the note, or there are liquidity strategies where you could do it later, right? Okay. The second thing is loans pay off early. So you can buy a 30-year loan and know with virtually 1,000% confidence it's not going to really go 30 years. So statistically, that loan is going to go about 8 years. You ever own a house?
People buy and sell.
You ever own a house and pay off the original mortgage on the house?
I haven't, but I'm young.
Well, then that's fairly rare, to be honest with you.
Yeah.
Most people on this podcast are go like, yeah, I lived in my house about 8 years and I refied and paid off the bank, or I sold the house because my job changed or whatever, right? I upgraded the house. I moved to a different city, like whatever reason in life. So statistically, even though you buy a 30-year note, your money is really not tied up 30 years.
Yeah. Well, I will be soon. I did just move to Dallas, but I haven't closed yet. So give me a week and I'll change my answer. Awesome. Well, Eddie, we're kind of running toward the end of the show here. Wanted to ask you about the future outlook, where you think, opportunity in note investing in real estate finance is heading. I know you mentioned kind of the cycle. Do you see that cycle shifting at any point? They've been talking about cutting rates for forever, I feel like, but at least when I'm in the world, that's what it feels like. But curious to get your take on that before we wrap things up today.
I don't think that anybody is predicting at the moment a drop in rates.
Yeah.
Right? The war has changed everything. It has changed inflationary numbers. It changed supply chain numbers. The mortgage market is driven by the 10-year bond market. It's not driven by the Fed. So they don't exactly always align up and down. And the bond rates went down for a little bit, but as soon as the Strait of Hamas became in the story, then all of a sudden you've seen mortgage rates pop back up. And it's because the bond rates are going to react quicker than the Fed is. The Fed only changes the rate every so often.
Yeah.
Right? Mm-hmm. Now, so the answer is, for things that we've talked about today and deeper things that I see in our future, I believe that the next 3 to 5 years in this business of buying notes is going to be the best I've ever seen and I've been doing this since 1980. Literally. Wow. That's how good I think it is. There's efficiencies in the market that are in progress. There's technology in the industry that is in progress, to the point where I'm involved with a firm that within a year we're going to be selling loans on blockchain. Like I'm saying, the efficiencies in this business and liquidity in this business is changing at lightning speed.
All right. Well, that's good. I mean, that's good. It's good to know there's other strategies we can use during this time. And I love hearing all your insights, Eddie. Where can people find you and connect with you if they want to learn more about these strategies and that maybe they want to check out your school, where can they learn more?
So they're going to go to noteschool.com/truly passive.
Okay.
noteschool.com/truly passive. And what we're going to do is give them just an introductory course. It's a gift, but the course is really good. It's got great examples. It's got great, like very specific things that people will have questions about, like how does that work? What does it mean to be the bank? How much money could I make? What does that look like? Oh, wait a minute. How Eddie says I can get some of my money back. That there's leveraging strategies. And the answer is, yeah, this leads you through a lot of the things that we sort of introduced the idea today, but didn't get into the how we do it.
Right. Yeah. Okay. Perfect. I'm going to check that out myself, man. So appreciate that. Everybody else, go check that out. It sounds like a great resource. And, Eddie's clearly knowledgeable, doing this since 1980, seen a lot of ups and downs. He's seen really high rates, really low rates, and everything in between. So great guy to learn from. So thank you, Eddie, again for your time today. It's been a pleasure having you on.
You bet. Thank you.
Thanks for tuning in to this episode of the Cash Flow Authority podcast. We hope the insights shared today help you take the next step toward optimizing your finances and building sustainable wealth. If you enjoyed this conversation, please take a moment to subscribe on your favorite podcast platform and leave us a review. It helps other entrepreneurs and investors discover the show. And don't forget to catch the next episode for more insights. Until then, keep mastering your cash flow.